Hi, I'm Quinn Winnow at Intercom's Oil and Gas Conference in Denver, Colorado. Joining me is John Schiller, Chairman and CEO of Energy XXI. Hi, John.
Good morning. How are you?
I'm great, thank you. Now, you folks recently reported fourth quarter and year-end 2011 results. Reserves were up 54%. Net debt was reduced by $200 million. What were the primary factors that contributed to this success?
Well, that's correct. We had a record year. A big part of that was the Exxon acquisition we did back in December 2010. Since that time, we've paid down over $200 million debt, like you talked about. For our last quarter, production ran 67% oil, so obviously realizing over $100 a barrel. Since our crude prices, as Louisiana Sweet, much closer to Brent, allowed us to generate some huge profit margins. So I think the acquisition will probably go down as the most, in our 5-year history, the most monumental event so far, and we'll just keep going from there.
Now, talk to us about your 2012 CapEx. How will you allocate capital among your various projects?
A good question. We've announced our budget's going to be between $380 million and $450. And basically, we're keeping $70 million back for just what you talked about. We're going to start with our best guess right now, based on all the economics we have. We always do our capital programs on present value per dollar invested, but we suspect that some of the Exxon assets are going to be even better than we know right now. So as we go through the year and start seeing some of those results, we'll swing some of that swing money into those fields. So you'll see Exxon getting about 70% of our drill dollars. 30% will go to our 70% of our non-ultra deep. First 100 million goes to ultra deep. After that, Exxon will get about 70%.
Now, how will you fund your 2012 drilling programs?
Totally out of cash flow. We're going to spend upside case of $450 million in CapEx. We've got about $110 million in interest payments and things like that, and we'll still generate somewhere north of $200 to $300 million in free cash flow. Pay down even more debt, and that, of course, as you know, goes straight to the value of our stock.
Now, the Davy Jones remains one of the most highly anticipated wells in the industry. How is this project proceeding? What updates can you give us?
Everything is going smoothly and marvelous. We just finished testing our subsurface controlled safety valve. We've already tested the tree. All those things are built and in the process of being shipped. We are actually utilizing the Rowan EXL3 rig right now for some Energy 21 work at Grand Isle, but we'll be letting that rig go back to McMahon in the middle of October. We'll start the completion then, and by middle of December, we'll have everything in the wellbore. We'll have the tree nippled up. The 25,000 pound BOP stack, which will be delivered November 30th, is the last thing that we need to get delivered, and then we'll perforate the well and fully expect to have a flow rate for everybody by the end of the year.
Wow. Now, you briefly mentioned about the ExxonMobil purchase. Talk to us in greater detail about that.
I've told people, and we've been straightforward. We modeled our company after Apache and some of the other great acquire and exploit companies. And I think you have to go back to the mid-90s when Shell sold their assets to Apache in the Gulf of Mexico to find such a great set of assets. As a result of these properties, we now operate 7 of the 11 largest oil fields ever produced on the shelf in the Gulf of Mexico. We picked up fields that had been discovered anywhere from 1948 to 1962. The smallest field has made over 100 million barrels, and the largest field has made over 630 million barrels. So you got a lot of oil to work with. As you've heard me say many times when I speak, we targeted oil fields because water works for you, not against you. As long as we move fluid, we're going to move the oil out of the ground.
So what can we expect the back half of 2011 from you folks?
We've been concentrating on non-rig work and workovers and recompletions since we got the assets. They've gone fabulous. I mean, we're averaging 2-month payouts on our recompletion and workovers. Average wells probably delivered about 1,000 barrels a day to the company. Now, as we go forward late this fall, you'll see us start picking up drilling rigs. We'll start drilling at South Tim 54, at West Delta 73. And I think you'll really start seeing the quality and depth of the inventory that we've gotten put together since the Exxon deal.
And John, you are a presenter here at the conference. What new insight have you gained?
Well, I think the crowd seemed to be as big as they've ever been, if not bigger. We were actually lucky enough to speak yesterday morning in the big room. And so we had a really good crowd in there and a really good crowd in the breakout. And I think the questions are on point and insightful. I mean, it's a fairly intelligent crowd of investors that are here.
Great. Is there anything else you wanted to add?
I think that's it.
Okay, well, John, it's been a pleasure talking with you today.
All right, it's good seeing you again.
I'm Quinn Nguyen for oilandgas360.com.